So look, I'd just like to switch gears a little bit now and update you on some exciting developments that we have occurring within the Vanguard business here in Australia. And I'd like to do that by introducing the concept of paradox. So paradox is a seemingly absurd or contradictory statement or proposition which, when investigated, may prove to be well-founded or true. Now, each and every single one of us today deal with paradox, probably daily, weekly, and more often than not, we're probably completely unawares of the fact that we're dealing with paradox. When I personally think about paradox, I think about a few situations that I've experienced over the years. Now, going back, unfortunately, more years than I'd care to remember, back at high school, one of my favourite books was The Animal Farm by George Orwell. And in it he wrote, "All animals are created equally, some are more equal than others." A great depiction on society in general. Is anybody here the father of young boys? So I'm the father of 3 young boys under 4 years of age. They're noisy, they're messy, they're crazy, they're volatile, and they're highly unpredictable. Both my wife and I, more often than we'd like, have to be cruel to be kind, to keep them in order. And my wife, through the mail, sends situations of paradox from various retailers, whereby she spends to save. If I spend $200, we'll save $50. Okay, paradox. And we have paradox in our language quite a lot. It can feel like Joe spoke earlier about, obviously the GFC in particular, it felt like it was the beginning of the end. And there are many situations in our life that feel somewhat bittersweet, all paradox. The business author Jim Collins, who wrote Good to Great and Built to Last, and as an aside is also a business coach to Vanguard's global senior executive team, and has played a huge role in actually helping us build out our business strategy around the globe. He wrote that in life we should look to embrace both the and or in life, and the great companies in particular do so. I've been at Vanguard now for 8 years, and myself along with my colleagues in the room are taught very early in our career to embrace the concept of paradox, and that in an organisation like ours, there are many times when we have to deal with the concept of paradox in our daily working life. In particular, we are a firm that cares for its crew or our employees and sets incredibly high standards for ourselves. We are an investment firm that is both short-term aware and has a long-term focus. We confidently know that we deliver product or investment capabilities that are both low cost and high quality. So I'm very excited to announce this morning that Vanguard has started to offer low cost, high quality, active capabilities into the Australian marketplace, available for you, the financial planning community, and your investors. For many, many years now, we have spoken to all of you about the role that both index and active plays within a truly diversified portfolio. And many of you in the room, I'm sure, have come along to our portfolio construction workshops where we talk about the framework of core satellite. At the same time, I'm sure there are some of you in the room right now that are thinking, Vanguard, low-cost index and active. That must be the ultimate paradox. And I'm sure there are more of you as well who are thinking, well, what does Vanguard actually believe in? Up on screen are our 4 investment beliefs. 4 words that I hope all of you and our team here in the room have spoken to you about at some point in time. These are 4 investment principles that we've never wavered from and that have stood the test of time. We believe in goals. We believe investors understanding what their time horizon is and what they're investing for. We believe in balance, making prudent decisions with all of the facts. We believe in cost. There aren't a huge amount of certainties in the investing world, but the control of costs is one of those. Costs matter. And if you needed any other additional endorsement about the impact of costs on investing, then I would certainly refer you to the letter that Warren Buffett wrote to his shareholders, his Berkshire Hathaway shareholders, over the weekend. And there's a term that he uses there, I think it's incredibly powerful. Fees never sleep. Costs matter. And finally, we believe in discipline. Staying the course as an investor seems incredibly easy, but we all know it's very difficult. And those who stay the course stand the greatest chance of reaching their investment goals. So why active now? Why active in Australia now? There are three very clear reasons why we're doing this. And I'll step through these in a little bit more detail. But firstly, it's in our DNA. We've been running active capabilities for a long time. We have a history with it. Secondly, there is a very clear opportunity for the Australian investor and the Australian advisor to access low-cost active capabilities in this marketplace that aren't otherwise available. And then finally, Vanguard's globalisation over the last 5 to 7 years, and in particular with our investment management group, has allowed us to harness the scale and expertise of that particular team to bring these capabilities here into the Australian marketplace. But before I go into each of these in detail, let's first define what active is in our world. What does active mean to the Vanguard business? And I think it's fairly simple. Active to us, active in Vanguard, is any deviation away from the traditional market cap weighted indice, which therefore delivers an exposure or an experience that is different from the traditional market cap weighted exposure itself. So we think it's a fairly straightforward and simple definition as to how we see active. It may be a little bit different to what the perception here in Australia. Our active strategies are certainly more traditional and structured in nature, and it's not the stock-picking mentality that most of us are more accustomed to in this part of the world when we're thinking about active. So let's go into a little bit more detail on the 3 points that I introduced a little bit earlier. And unlike any other market in the world that Vanguard participates in, the concept that we would be delivering active capabilities here in Australia would probably seem the most unlikely. Why is that? Well, we've been operating here for over 20 years now. We're the longest tenured business for Vanguard outside of the US. And we've been seen to be the index specialist for much of that time frame. We're the steward of $115 billion here in Australia, 35 of which is through the financial planning community. And all of that exposure is through 43 managed funds, 17 exchange-traded funds, all of which are tracked to traditional market cap weighted indexes. Across that whole time frame, across that whole 20-year period, we've never offered any active capability. So it really should come as no surprise that many in the investment community here in Australia perceive Vanguard's philosophy to be index only. But if we look more broadly at the history of our organisation, Vanguard's now been operating for over 40 years. But our roots in active stretch much further than that. They stretch back to 1929 and our association with the Wellington Funds Management Company and our founder, Jack Bogle. When Mr. Bogle started Vanguard in the mid-1970s, he started with 11 funds. All of those funds were actively managed. Today, we're now looking after over $5 trillion of assets globally, both index and active capabilities. But importantly, of that $5 trillion, 30% or $1.5 trillion of that is actively managed. So with $5 trillion under assets, we're the second largest investment manager around the world, in the globe. If we were to take that $1.5 trillion of active assets and start that as its own entity its own investment management shop, it would actually make us the 5th largest investment manager globally. So active is in our DNA. We have a history with it. We've been doing it successfully for a long time. And we now think it is time to bring that to Australia. The second reason why active now locally is the opportunity for the Australian investor. There's a strong appetite for active in the Australian marketplace. 80% of assets here are actively managed. Yet the access points for you as practitioners and your clients to access low-cost active management is incredibly narrow. We think there is an opportunity, a space in the market for low-cost active management, and we believe Vanguard is the appropriate business to fill that gap. In each jurisdiction, in each market that Vanguard has entered into through its history, we've played some part in being able to drive the average expense ratios down in that marketplace. And this concept has been referred to as the Vanguard effect. The best example of this is probably in the United States. And if I look at the average expense ratios in the US going back to the year 2000, the average MER then was around about 104 basis points. Today, it's just over 62 basis points. Vanguard's average expense ratio in that same time frame has moved from 27 basis points to around about 12. We actually have a business objective globally to have an average expense ratio of 10 basis points by the year 2020. We firmly believe that we can bring the Vanguard effect to Australia. And we think we need to. Today, you as practitioners and your clients, if they're looking to access active capabilities in the local market, whether they be domestic or international, on average, have to pay 123 basis points for the privilege to do so. Now, if I think back to some of the numbers that Joe spoke to us about earlier, and the return environment we're looking at, net return after inflation is probably circa 4%. So upwards of 25% of that return off the bat will come out of an average expense ratio of 123 basis points. Now, some of the strategies that we're looking to bring into the market today, which I'll speak about in a moment, we believe can help deliver that Vanguard effect here for your investors, where we'll have an average expense ratio on the initial product lineup of around about 45 basis points. Costs matter. High costs create a hurdle, create a friction within a portfolio that puts a brake on the delivery of net real return back into your clients' portfolios. A potential brake on the goals and aspirations that they've got as part of their financial plan. What's the outcome of reducing costs? What's the outcome of reducing those hurdles and reducing that friction? Well, as I said earlier, it is about giving them the best chance of investment success and delivering better net real returns to their portfolios. And up on screen, we have Vanguard's active capabilities in the US, both equity and fixed income, and the performance of those suite of funds against our peers, both over short, medium, and long-term timeframes, and the percentage of those we've outperformed. And I think this kind of data confirms and verifies, to me anyway, that in the concept of paradox, the ability to have a product or an investment capability that can be both low cost and high quality is confirmed. The third reason around why active now is, as I mentioned earlier, our globalisation over the last 5 to 7 years. As part of that globalisation, and in particular our investment management group, we can really harness that expertise and that scale across the teams that we've got in many parts of the world and deliver these active capabilities to you when we haven't been able to do so in our previous 20 years. As we bring that capability to Australia, we assess active looking at these three pillars, both our own capabilities, but also the active capabilities of the external managers. We look at talent, we look at costs, and we look at patience. Talent. Does the capability have the people and the process to be able to demonstrate their ability? Cost. Cost matters, and I think I've spoken enough as to the importance of cost in investing. And then finally, patience. When we're working with active capabilities, we need to look to stay the course. We need to be patient. And we need to also be accepting that we will have periods of underperformance, and that staying the course is incredibly important. So what does this all mean? How do we put all of this together? Index, active. And I mentioned earlier, our team here in the room and our work with financial planners now for many, many years, we have always maintained that there is an important role for both index and active in portfolio construction. One of the important points when we are building portfolios is to continue to focus on driving down the overall costs within that portfolio so that you can give your client the best chance of investment success and help support net real returns back into their portfolio. Again, we've been talking to you about this for many years through our portfolio construction workshop, and I'm pleased to say we've got the architect of our workshop in the room this morning, Michael Houlihan, who I did threaten I would mention this morning. But we've been talking about the portfolio construction workshop and the framework of core satellite for many, many years now to all of you, the role of both index and active in a portfolio. And our position has not changed. The starting point in any good portfolio construction begins with index for most, if not all, clients. What role does active play? Well, I think the technical answer is that it really depends. The degree of active is dependent upon the individual circumstances of each of your clients and their goals, aspirations, risk appetite, etc. But our position around core satellite as a suitable framework to start building portfolios has not changed. Now, I'm sure most of you are, by this stage, quite interested in the product set that we're looking to bring out initially. And in Australia, there are four products that are available to you today. We have two factor funds, the Global Value Equity Fund and the Global Minimum Volatility Fund. Both of these are priced in at 45 basis points. Early in Q2, we hope to deliver these as exchange-traded funds. The third strategy is Vanguard's Global Quantitative Equity Fund, also priced in at 45 basis points. And then finally, a holistic retirement solution through our Managed Payout Fund, which is priced in at 55 basis points. Each of these strategies are managed from outside or from our Asia Pacific hub down here in Melbourne. And I think the other important point to make around our product set, particularly for those of you that have been working and investing with Vanguard for many years, is that the experience of our product suite will be much like the experience that we've had with ETFs. Back in 2009, we started with 3 ETFs. Today, it's 17. And the rollout of our active capabilities will occur as we, in a methodical approach, and we'll be bringing product to market that is clearly appropriate for the local market conditions and investors. So, in beginning to conclude and wrap up, for many it may seem the ultimate paradox, as I mentioned earlier, that Vanguard could be seen to be delivering both low cost, high quality, index and active capabilities. But there are 3 very clear reasons why we're doing it. It's in our DNA, it's in our history, we've been doing it for a long time, we know we can do it well. Secondly, there is a very clear opportunity for your clients to access low-cost active capabilities, which aren't there today. And finally, the globalisation piece and the access to our wider investment management group. As a business, we are really excited about these developments. I think for our relationships with yourselves, the intermediary market, It allows us to have broader conversations, deeper conversations around portfolio construction. Importantly though, it gives more options for yourselves with your clients to access low-cost investing. It may not be appropriate, and if it's not appropriate, then it certainly shouldn't be options that you take up, but they are options all the same. A few thank yous before we break. I want to thank Joe Davis. Joe, up to this point, has done about 40 hours of flying. I've done about 35 with him. So, I think I'm not quite getting the same experience of flying that Joe's had. I don't think he quite realises he's still got 30 to go, flying back to the US. But we really appreciate, Joe, the time and effort that you've taken with our clients through the course of this week, and obviously our clients here in Melbourne. On behalf of the team here as well, Marcus Wallace, we've got Ebony Gilbert, Tanya Diaz, Stuart Robinson, Lacey Fonseca, and Leela Romanos. Thank you for everything you do for your clients. We really appreciate the trust that you put in Vanguard with their assets and the goals and aspirations that you're looking to match for them. And again, we will be around this morning for questions with both Joe and myself down here at the front of the stage. You'll notice there are no feedback forms this morning. We are really bucking the trend. We're really adopting Joe's idea of embracing technology. So there are no paper feedback forms, but we will be emailing you. So there will be a survey post this morning's event, which will contribute to CPD points. If you haven't had your name signed off at the front desk, please do so. That will then allow you to be marked up, and we will send you that email. Thank you again for your time this morning. We really hope it's been of value, and enjoy the rest of your day. Thank you.